Hello class and welcome to yet another edition of YouTube Accounting Managerial Accounting with Tom Ball. So, for your homework on Monday, you guys are doing Chapter 12, Appendix A. That means that after that, all we have left is Chapter 13 and Chapter 14. That's it. We're done after that. It's go time. You're going to be done with Managerial Accounting. Isn't that crazy? Get excited! Since this video is coming a little late in the weekend, since it's Sunday already, I thought I would help you guys out and go through one of the homework problems that's due for tomorrow, Monday. Particularly, I want to go through problem 12A-4 because I think that one hits on all the key points that I really want you to take out of the appendix. So for the format of this, I'm just going to run through the different parts of the problem. I'm going to give you some hints, maybe tell you what some of the final answers that you're going to try and get at are going to be, and then you can take this knowledge, work through the problem yourself, and see if you can get to the answers that I tell you. So with that being said, part 1 of chapter 12, appendix A-4. So they tell you to refer to case 1 shown above. Alpha division can avoid $2 per unit in commissions on any sales to beta division. Will the managers agree on to a transfer? And if so, within what range will the transfer price be? The number here that we're focusing on is that $2 in sales commission. Is that sales commission going to be a fixed expense, a variable expense? Where is it going to fit into our equation? How are we going to deal with it? How are we going to use this information to calculate our sales price? Well, sales commission would probably be a variable expense, right? Because the more sales I create, the higher my sales commission is going to be, correct? So with that being said, consider the sales commission when you're calculating the variable cost per unit part of this equation. And this is obviously going to be from the seller's perspective, so we can focus on that. And then another hint I'm going to throw out there is, while it does definitely affect the variable cost per unit, how is that going to also affect the total contribution due to lost sales? And with all that information that I just gave you, I also will tell you that the final answer that you should get from the seller's perspective, the negotiated transfer price, should be greater or equal to $28. Alright, so those are your clues for part 1. Let's move on to part 2. In part 2, they're talking about the case 2. So, a study indicates that Alpha Division can avoid $5 per unit in shipping costs on any sales to Beta Division. So how is that $5 savings going to modify the equation that we're working with? We're working with new numbers here, so take that into account. We're looking at case 2, and think about what's going to happen with that $5 per unit in shipping costs. Well, once again, that $5 in shipping costs is probably going to be a variable expense, right? Because the more we ship, the more shipping expenses we're going to incur. So from the standpoint of the selling division, your transfer price must be greater than or equal to $85. And that should be the total amount that you should get. Now compare that number to what you get for the buyer's perspective and see if they can make a deal based on those numbers. And then part B of question 2 is really important as well, so I really want to make sure that you guys understand this part. Assume that Alpha Division offers to sell 30,000 units to Beta Division for $88 per unit, and that Beta Division refuses this price. What will be the loss in potential profits for the company as a whole? Well, as we saw from this one, the transfer price from the seller's perspective has to be greater than or equal to $85, and the transfer price from the buyer's perspective has to be less than or equal to $89. So there's a $4 difference in there, right? That $4 is going to be the potential lost profit from doing this internal transfer. So if you take that $4 and multiply it by the total number of units that you're transferring, or potentially transferring, or would have transferred if they would have accepted the deal, that's going to be your total lost profit on this deal. And then in part 3, they're asking about assuming that Beta Division is now receiving an 8% price discount from the outside supplier. Now what's going to happen? Will the managers agree to a transfer? So my hint to you on this one is that before on parts 1 and 2 we were looking a lot from the seller's perspective and seeing how their calculations would be modified. This one I might want to focus a little bit more on the buyer's perspective, seeing as how they have the option to buy from the outside supplier on an 8% discount. How is that calculation going to come into play? And to give you a clue to the answer as this one, I'll let you know that the transfer price from the buyer's perspective must be less than or equal to $69. And then in part B of question number 3, it's asking about whether or not the ROI is going to increase or decrease if the Beta Division offered to buy 20,000 units from Alpha Division. And the clue I want to give you guys on this one is to look at the capacity issues involved in case 3, in part 3, and see if they have idle capacity, are they at maximum capacity, are they going to be able to handle these extra 20,000 units, and if so, how is that going to affect their ROI? Alright, and then finally part 4, I like this one a lot because it kind of brings it all together. It uses all the different number crunching calculations that we can do for this. So, refer to case 4 shown above. Assume that beta division wants alpha division to provide it with 120,000 units of a different product from the one that alpha division is now producing. Okay, they give you some additional information there. Read through that. Think about how all these different numbers come into play and how they're going to affect the calculations on transfer price, particularly for the seller's division. And then once you try and use all those numbers to calculate the transfer price, I'm going to hint at you that the transfer price for the selling division has to be greater than or equal to $30. Alright, so there you go. That was a quick run through of some of the tips and tricks that you should be aware of as you're going through this problem. If you already did, fantastic. Maybe you can use this advice from the YouTube video to re-look at your answers and make sure that you calculated them correctly. If you're just starting your homework, use these as clues to make sure that you really understand the material in Appendix A for Chapter 12. And with that being said, adios.